In this video, I will be breaking down and sharing information about the new CalHFA Dream Loan. I'll be sharing information about what you get out of this program, who qualifies for CalHFA, and sharing the pros and cons of down payment assistance equity sharing loans in general. This is a down payment assistance equity sharing loan offered by CalHFA, which stands for the California Housing Finance Agency. I've been having a high number of people reach out to me about this program because they hear the term down payment assistance. I get it. Buying a home in California is difficult, even if you live in a household where two people are making a six-figure income. They're labeling this the California Dream for All program, so understandably, there are people who are getting excited about the idea of home ownership. But we'll take a closer look at this program and equity sharing in general. I'm not sure if I would call this a dream or a nightmare. That's up for you to decide. With the CalHFA program, to simplify this, you essentially have two different loans when you go to purchase your home. The first loan is an 80% loan through the CalHFA program that would work similarly to getting a loan with any other lender. And then you receive up to a 20% down payment assistance to help you purchase the home. This is a conventional loan with no private mortgage insurance, also known as PMI, which can add hundreds of dollars to your monthly mortgage payment. In order to qualify, you must be a first-time homeowner, have a credit score of at least 680, and of course, there are income limits depending on which county you live in. In Monterey County, for example, there is a $178,000 income limit. That would be total combined income for your household. So far, it sounds pretty good, right? But when you look into the program further, what is actually being offered and what do you have to give back in return? Unfortunately, there aren't many examples of free money, and this is no different. With the equity sharing portion of the CalHFA loan and down payment assistance equity sharing loans in general, when you go to sell your home, or if you want to refinance, you have to pay back that loan and a significant percentage of the equity that you've earned during the time that you've owned the home. I've seen a range in these equity sharing programs as to the percentage that you have to pay back, but when it comes to the CalHFA program, it's a 20% that you have to pay back on the equity that you've earned. So let's say that you're purchasing a $600,000 house. 20% of that would be a $120,000 down payment assistance loan that you get through the CalHFA program. If you hang on to your house for say 10 years before selling, it wouldn't be out of the question for you to have earned $500,000 in equity in the state of California during that time period. Home prices more than doubled in Monterey County between 2008 and 2018. 20% of that $500,000 in equity would be another $100,000 on top of the $120,000, making it a total of $220,000 that you have to pay back at the time of refinance or selling your home. Now let's take a look at some of the other drawbacks when it comes to equity sharing programs. In many cases when it comes to equity sharing programs, if you end up wanting to refinance your loan and get a better rate, you may not be in a financial position which allows for you to refinance at that time. It's really going to depend on if you've earned enough equity in your home or if you've paid off enough of your loan. If you lock in a rate in the mid to high 6% where rates currently are, and then rates drop in the 4s or 5%, which they are potentially expected to do this calendar year, you may not be in a position where you can refinance your loan at that better rate, which will help you to pay significantly less on your monthly mortgage payment. When rates dropped to historic lows between 2020 and 2022, some owners through equity sharing programs felt handcuffed to their house as they couldn't refinance out of their current loan without selling. Not to mention what happens if you want to sell your home quickly, say a year or 2 years after purchasing, and the value of your home has dropped and you're underwater. CalHFA has a total of $300 million allocated in their first rollout of this fund, and it's unclear if or when there will be another round of funding into this program. That may sound like a lot of money, but if you look at home prices in the state of California, that money may not go too far unless there is another round of funding. If the average person is receiving $50,000, which would be a low amount in some counties when it comes to a 20% down payment assistance, that would mean that only 6,000 different homes would be able to be funded through this program until the fund is out of money. I'm not one to say if this program or equity sharing down payment assistance in general is the right option for you and your family. For some, it may be the only path to current home ownership. Keep in mind you can't apply to receive these funds prior to being in escrow. In order to receive these funds, you need to be in contract for the purchase of your home. Once in contract, if you qualify, you will have to see if there is still available funding at that time in order to reserve funding for your purchase. Personally, I think that down payment assistance equity sharing programs wouldn't be out there if this wasn't something that is beneficial to the people who are lending the money. These funds are being offered because over time, the people who are offering this equity sharing down payment assistance are going to make a lot of money off the equity through your purchase. There have been other programs and are other programs like this out there, such as Landed, which is a down payment assistance equity sharing program that is available for teachers throughout the state of California. When it wasn't as profitable as they anticipated, Landed stopped offering funding for a period of time for teachers in Monterey County. As a former teacher myself, I have additional thoughts about the Landed program, but I will hold off on saying those because I don't want my video to get flagged for inappropriate language. I've personally helped dozens of teachers purchase homes in Monterey County without having to resort to equity sharing programs. In my professional opinion, if you don't have 20% saved up for a down payment, there are plenty of other options out there for you. You can purchase a home with as little as 5% down for a conventional loan, as little as 3.5% down for an FHA loan, and if you are active military or a veteran, you can purchase a home with as little as 0% down with a VA loan. Depending on what you do for work, there are down payment assistance programs that do not require equity sharing on the other end. Family members can also provide a gift for you when it comes to your down payment, so that could be an option for you as well. When it comes to being a realtor or a lender, it's the exact same thing whether a buyer purchases through one of these equity sharing programs or not. This is based off of the purchase price when it comes to the commission that is earned for a realtor or a lender. But I wouldn't ever recommend something to people that I wouldn't do myself. Chances are you're working hard to save up money for your first home purchase, so I think that you should reap all of the benefits of the equity that you earn from your purchase. If you have any questions about CalHFA or down payment assistance equity sharing loans in general, feel free to reach out and I'll get you connected with one of my local preferred lenders who can take a look at your finances and see if this is the best option for you or if there's something better for you out there. If you're a seller wondering the value of your home in today's market, or if you're a buyer looking for your dream home in Monterey or Santa Cruz counties, be sure to give me a call, send me a text, or an email at toby.fernie@gmail.com. I'd be happy to help you reach your real estate goals. Like and subscribe, stay tuned for future content all about real estate and living here in Monterey, California.
Click the icon to subscribe to more content from living in Monterey, California.